This episode of Profiles in Risk is brought to you by InsurTech Connect Las Vegas. The legendary ITC is coming back to Vegas October 14 to 16 at the Mandalay Bay Casino. ITC is the largest InsurTech conference in the world by a long shot and the absolute cannot miss event of the year. We never miss it, neither should you. Register today using our discount code INSNerd200. Again, that's INSNerd200 and see you in Vegas, baby. And when you're there, look for me. I'm the guy with the red top hat and ask me for a magic trick. Hello and welcome to a very special episode of Profiles in Risk. This is your overly caffeinated host, Tony Cañas, recording like the seventh episode that I'm recording from my native Costa Rica. I'm here for my mom's 65th, in Costa Rica for a couple of weeks. So today's episode is only the third carrier CEO to ever come on the podcast. The original model, we wanted VPs and the C-level people from carriers to come on the podcast, talk about careers. And the reality is it's hard to get carrier people on. So today we have Bill Martin, President and CEO at Plymouth Rock Home Assurance. So first of all, Bill, thank you for making the time. Like this means a lot to us.
Thank you.
Awesome. So we met at a panel for InsurTech New York about talent and especially innovation when it comes to talent. And during the prep for that panel, you mentioned your views on RTO, on being in the office and how important that is. And at first, I thought I had misheard you. So I literally in this prep call, I literally went out of the way to say, did you actually say what I think you said? If so, I'd love to have you on the podcast. And then I was shocked when you said yes to both questions. And of course, with your busy schedule, we've waited a few months for the timing to work out. And then in the panel, I absolutely love this part. The panel, Bill actually gave me a heads up that he was sitting next to me. So I'm moderating the panel. He's sitting next to me, and they sat us that way. They told us where to sit. So he actually gave me a heads up that he was going to go into the remote thing. Afterwards, that it was a perfect chance for this magician to do a fire wallet on stage at InsurTech New York, one of the highlights of my conference season this year. So, Bill, you've got an incredible insurance career, really a legend of our industry. And I do have your LinkedIn in front of me. So you've led at this point a few different carriers. And if I'm not mistaken, you grew up from the product side, and then pricing, then marketing and operations. So 40 years insurance career, most of that in the leadership of different carriers. And then for the last 8 at Plymouth Rock Home Assurance. Also, interestingly, if I'm not mistaken, were you a founder or co-founder for Neptune Flood also?
Yes. I founded Neptune Flood with a gentleman named Jim Albert in 2015, but it really didn't take off until a third, what I would call founder, joined us in 2017 and 18. He's really responsible for most of its success, but the design of the program and how it works was something that I had set up. Yeah.
All right. So that's a super interesting move for a long-time carrier executive, especially one that is not a fan of remote. So definitely curious on that. But I'd love to kind of give you the floor. I think I covered your career fairly well, but if you want to like dig into anything, please go ahead.
Well, I mean, I think what might not be apparent in it is the power of somebody who has entrepreneurial thinking going into what you might call a legacy carrier, and the kind of way that carrier will feed off of the boldness of the idea, or really the determination to make it work in spite of many constructs that might prevent such sort of risk taking at a large legacy carrier. And I think that the truth is they kind of get starved for the people who are really terribly concerned about being consistent with tradition. I think they actually enjoy having those types of people around and can fund them and make them be even more successful. So, in a way, we opened the new territories when I was at Progressive 40 years ago, and that was startup work. With creating a new product, writing the forms, setting the prices, getting the filings that were necessary, and getting the systems going, doing new things at Progressive. Progressive has always been restarting. It's always been reinventing pieces of insurance, and that's why they're doing well even today. And then I go to Travelers where they want to start a product department. Back then, product management wasn't common. Now it's got a meaning in the industry. Actually, everybody knows what it is. Back then, it was a revolution that only Progressive had, and so Travelers said we wanted to do the same thing. They called it a regional pricing officer or something like that, and we had to get through the Prop 103 period, and that took some invention. Did a startup in Baltimore, did a startup in Dallas, was a legacy carrier who wanted to get out of trucking and into auto. Did a startup in California, was a company that wanted to enter non-standard auto insurance that was doing Michigan liquor liability. And then I went to Farmers, and Farmers was a legacy carrier by all measures and all definitions and all activity and had all kinds of constructs, but it was being led by people who really wanted to change the game. So when you appeal to them, they say, "Hey, Bill, go for it. See if you can do that in auto." And we did some pretty cool things, including acquire two companies, 21st Century and Bristol West, which they often brag about taking over Farmers, but I kind of laugh because with the capital power of Farmers and its distribution power added to the invention that these ex-progressive people who had joined it had brought in, they really could thrive and did indeed grow pretty rapidly and profitably during that period. Um, I got hired away to work on a company in Florida where I got the president's role, and the issue was to solve home insurance and solve
In the worst market
state
in the
debts.
country
Very hard
for
to
home
solve it.
insurance.
But it's actually the best place to solve it in, because if you get the reinsurance and cat risk right, you could do a lot of things with the attritional or the non-catastrophe business that is really experimental, inventive, and could totally fail, and you still would make money because it was a good year with hurricanes, right? So
Oh, makes sense.
it's actually the great place to try what we've actually executed on successfully here at Plymouth Rock, which is, there's a lot of companies trying to make it easier for people to quote, a lot of people trying to get preferred business through such a quote channel. And I think we're maybe the first that's doing it sustainably profitably.
Fantastic. And that is not the main topic we're going to talk about today, but that is hard. Absolutely. Many have tried to figure out how to get good middle market personal lines business, the direct route, and it is hard. The agencies do seem to have a real strong hold
Tony, we
on
say
that
we
business.
say that. I mean, what I know is that every great insurance story, as great as the design of the product and the tech and everything is a distribution story. It's
Absolutely.
not. Yes, it's not a build it and they will come thing. You need people to actually execute on, and that's what Trevor Burgess has done so well at Neptune, and what, frankly, Jim Stone has done at Plymouth Rock. He's going to be considered legacy sometime soon because we're in the billions. But the truth is, he's the type of guy who tries to think way out of the box about how people can sell what we give them, or whether there's some way to sell it that makes the person want to buy it. And that's kind of cool. It's good to work in those organizations.
Fantastic. That's a fantastic introduction. Thank you. Um, so to me, it's kind of fascinating that you've got this great history of innovation, and yet at Plymouth Rock Home Assurance, you've made in-person work post-COVID a strong and visible priority. Why?
Because I think what'll give us a competitive advantage. I'm rooting for everybody else to do remote, because I think we'll actually have an advantage over them by not being remote. It certainly narrows the world of who I can hire. Everybody wants to work at home. There's a bunch of inconveniences with commuting into a city like Boston. And there's a lot of expense involved. You have to give them a place to work and so forth. But the end of the day, you want to succeed. You want to beat the competition. And you're saying, what are the things that I do in every aspect of what I do, whether it be claims handling, whether it be hiring, whether it be pricing or whatever. Every one of those things you look at and say, how do I beat the competition with this? You don't have to do all of them, but there are some that are such clear winners that maybe you should do. So in my world, one of the things that's a clear winner is to have people working with each other and in co-located while they work. And it just creates the success that I think some of our competitors will miss out on. You forgot to mention that on the panel. The reason I brought it up was because one of the panelists was talking about this technology he was introducing to try and make it as if you're in the same room when you're working at home. And I just don't understand, why didn't you just put them in the same room? And then he had a bunch of other technology that he was measuring adoption on. And that one I don't understand either, because like if they're not adopting it, maybe there's something wrong with it. You always want to go to something that's easier and better. So it just the panel was kind of confusing me because the corporate speak, the consultative speak was kind of driving me crazy because it was creating more questions than it was answering. Why buy tech to get people to look like they're in the same room if you can put them in the same room? And why? And actually, it sounded like you could actually do it cheaper to have the guy fly into the office every day. And then why create tech that's not so good that people want to use it? Why spend the money to do it? And why do you have to have adoption rates or change management when people should want to do something that's easier and better for them? So it was just an opportunity for me to kind of throw some cold water on the consultant speak.
Thank you. Partially, in some things I do agree. Uh, Personally, what I've seen, and we come from vastly different backgrounds. I've never actually executed. I've never actually ran a department, much less a company. I live in the talent space. I help companies recruit, and I talk to insurance talent every day and get a feel for what they're looking for. Um, it In my experience and in the research I've read, there are things that definitely benefit from being in person. Training is definitely better unless you get really, really good at it. It can be done, but it's much harder. It definitely benefits from being in person. Team building, right? There is a insurtech influencer whose name I can't say on this particular topic because he asked me not to, but he's very well known, and he is a big return to the office type. He grew up in the consulting space before coming to insurance, and his argument is, Tony, if you're such a big fan of remote, why do I run into you 20 times a year at different conferences? Clearly, you believe there's a value to in person. And yes, when it comes to building relationships and when it comes to team building, there's a definite value to in person. And then the third thing where I think there's definitely value to in person is true strategic work. Uh, but my argument against it is kind of rooted on uh, your average insurance professional. 90% of their work, maybe more, is not training, team building, or strategic work. It's executing on their day job, right? And now one thing that is super frustrating that you are successfully avoiding by going 4 to 5 times a week in the office for everybody uh, is there's nothing. The worst thing you can do is force me to come into the office to sit in Zoom meetings, right? So like hybrid done wrong is the worst thing you can do. At least you don't have that problem, right? If they're in the office, they're meeting in person, so that is good. The problem is the majority of the talent, and especially kind of the future generations of talent, want to have the flexibility to be remote X percentage of the time, if not most of the time. And my little addition to the conversation is kind of this piece. To me, as a foreigner, having grown up outside of the States and having now lived in the States for 23 years, Um, Having worked my entire career in the States, to me, it's really interesting that in the States, we talk about everything as a market, except for white collar labor. Excuse me, for except for white collar labor. Uh, and in my experience, white collar labor, and especially insurance labor, it's definitely a market. And I think you do recognize that when you say that being in person definitely narrows who you can hire. And I would add who you can retain. Uh, but if white collar labor and insurance labor is a market, the one thing that I can tell you, because that's the area of the industry I live in, we have more work that requires experience than in people with the experience to do it. That's why unemployment is so
You're
low in insurance.
confusing
Go ahead.
you're confusing two things. One is whether there are people out there who it's important to them that if that they can, they want to work at home. So yes, there's a group like that. But your presumption is that there isn't a difference in the quality of those people, or that I'm missing out on some high quality people. I am missing out on some high quality people who don't want to work at work. There's no doubt about it. But I don't believe that I've got a bias against high quality. I don't think there's a common something common between somebody who wants to work at home and somebody who's a high quality person. I don't see that correlation at all. I see plenty of high quality people who are very happy to come to work and actually prefer it. One thing you got to remember, it's really important, is that when you're working with others, uh, communication is so important. And what communication is when you know that the other person understands you. So one of the weird things about what you're saying is, about Zoom meetings that I was laughing at, is I hate meetings, even at work. I make everybody come to work, and I don't want meetings. But I kind of do. I want the one-on-one interaction. And the
Mm-hmm.
reason that one-on-one interaction is really important is because the person is not embarrassed to ask you what they don't know about most of the time. Sometimes they still are. But and you can confirm their understanding of what you're trying to communicate to them. It's things that you don't have time to do in a larger group meeting where everybody's presenting something really quick. And one person in the room might ask a question, but it might have nothing to do with it, what everybody else is interested in. And if it is, great. If it isn't. So I'm not a big fan of large group meetings. I think I told my team, whenever they're meeting with more than 5 people, do what you can to kill it, because that's lazy
Love that.
collaboration. It's not collaboration. Collaboration is when you're actually sitting down and talking with each other, and it's kind of an even exchange of thoughts, ideas, and questions of things you do and don't understand. And that can't happen in a large meeting because you have allocated time. One-on-one, you don't really have. You can usually get it done in 20 minutes or so and have much better understanding than a 1 hour meeting with 20 people. One-way communication, fine. You can do that in a big meeting and celebrate accomplishments and stuff like that. But one-on-one is communication. One-on-one online has to be scheduled, has to be on screen, which is something that's becoming a problem remote, and has to involve some very, very careful understanding of what you're looking at on the screen, saying one-dimensionally, am I really getting an impression of their nonverbal reaction? Am I really understanding what they're doing? But the most important thing on the one-on-one is when I have two claims people or two customer service people or two underwriters sitting next to each other, and they hear each other work. And
Yes.
they see immediately, and you say that's training, but it's not. You're always training.
Yeah.
Training doesn't end when you're a CEO. I learn more from hearing things across the hall than I'll ever learn at home. So, and by the way, also have my, understand some idea of what's going on. If there's some commotion over in the claims department, I can go over there and, celebrate with them and figure out what it is. You have a lot of MBA schools who try and take management successes and make them into some sort of bromide or paradigm that everybody should achieve to. But it's really uniqueness that makes you achieve. And when they say, but there's one thing they say that actually is probably true, and that's, culture eats strategy for lunch. You've heard that saying. Working at home prevents a culture. All the common things that create a culture are erased when you're doing it online. Anybody can be in that situation. We had 750 people at a tall ship yesterday partying together for a company picnic. And you can say, oh, you can do that with remote. I says, yeah, if you fly them in and they have to go home or catch a plane afterwards, so they're not going out drinking and having fun with each other afterward. And they see, what kind of shorts their CEO wears, or they see somebody making jokes somewhere else, or so they see somebody talk about how great the company is and why they've been with them 30 years. That's in a different department that they never would interact with online because they're in a different department. But in person, you're going to run into them in the cafeteria. You're going to run into them on the train. You're going to run into them at maybe even go to lunch with them, maybe even marry them. And I think that social interaction is the culture, and it's eliminated by the online work. Now, would I tell you everybody should be at work? I say, no, you get to choose. Your CEO gets to choose, and thus the employee gets to choose. I like the way it works right now, where an employee can say, I don't want to work at work 5 days a week, so I'm not going to work at Plymouth Rock. I think that's okay. Go work for a company that allows for more remote. I'm just saying, I think I'm going to have a competitive advantage by focusing on people who want to come to work.
It is a very interesting perspective, and a lot of what you say, you're absolutely right.
By the way, you talk about me having a narrower hiring pool. It's actually a pretty good hiring pool, I think. I think I might have a bias in the pool. I'm not sure yet. But that bias is that people are coming right out of college who are really brilliant, actually kind of want to be around other people socially.
Well,
They don't want to be alone.
so the
And then people who are, empty nested, this is an opportunity not to just be sitting in two computers in two rooms and come to, kind of have another culture that you're spending, another social culture that you're spending time with. But one other thing is I probably am going to have to pay more because I've created a hassle for the customer to commute every day
I'm glad that
and,
you
and
recognize that.
created a hassle for them not to be able to get away for certain life events during the day, or to run errands only on weekends or whatever. But that's not new. That's been happening for, since we've had offices and since we've had cities. That's not new. People have figured out how to manage those sorts of things. It just might be that I'll have to pay them a little more than they would get at home.
That
Yes, Plymouth Rock pays more to have you at work. I will say that out loud. So.
I'm glad that yeah, no, the main issues within the office you're definitely addressing. And I'm glad that you understand that you do have to pay more from the recruiting perspective. As a third party recruiter, it is incredible how much more difficult it is to recruit for a role when it's in the office. And what ends up happening is it takes longer and it ends up being more expensive. It,
Well, I don't know about that. I mean, you ask them the question early, or you say, hey, if you notice in the ad, we said that you do have to come into the work four
yes.
days a week or 5 days a week. And if they say, yep, I have no problem with that, it's actually contingent. It's like, or how much you're going to pay me to do that. And by the way, most people don't leave the work at work unless they're going to get paid more, which is a kind of funny thing. I have yet to find there's a very, very small portion of the people who've left us solely because they want to work at home. Most all of them are also getting a promotion or pay. So I'm not sure that math in practice the fungibility of the employee market still has a lot to do with pay.
I agree with everything you said about meetings. I agree with everything you said about uh, the value of one-on-ones and how one-on-ones online are not nearly as good. They have to be scheduled. And the learning by osmosis, absolutely true. The being surrounded by the people that are doing your job that are more experienced accelerates your learning and you keep learning forever. That is absolutely, and that one piece is very hard to replicate
I
remote.
have to be
Uh,
fair about this, right? I don't want to force everybody to not have remote. You get it if you want it. Not my company, but you get it if you want it. And you can choose another company because of that. I'm okay with that. I don't think there should be some mandate that everybody should have work at home. I think that's where it's going. You get some people getting religious about it. They got really upset at some of these companies that announced back to work and were like online flaming about it. And I'm thinking,
yeah.
why wouldn't you just go
Uh,
work somewhere
I,
else?
I,
I
I think
don't get it. I mean, it's not that hard to find someplace that's remote to
I,
work for because you have the whole world of businesses that have remote available to you. You might have more options as a remote worker than you do as an office worker because you don't have to be there. So I don't understand the the pain of having to switch a company because the company decides you want to be at work. I don't, it's like a religion almost now. Like you should never be a corporation that requires that work. That's evil. And I'm like, well,
Yeah, no, I agree with
it's
you
the
with you.
corporation's choice and you can choose another corporation.
I I sometimes probably sound like a remote absolutist, and I'm actually not. I personally enjoyed some of the offices I worked at, and where I lean into, I think that flexibility. I tend to think the perfect situation, and
That's a
of course,
different issue, right? If somebody
yeah.
says to me, Bill, my daughter has a 2 o'clock soccer game, I really want to get home for it. My answer is, see you later. Have fun.
Um,
They know that you can't get behind on work and that you
mhm.
have to make it up if it
Yeah,
requires time. But that's that flexibility is a different thing than working remote.
yeah. So
The structure, it's the forced acceptance of virtual that I don't want to give people. I want them to be at work as a default, not at home as a default.
so I in my mind, the perfect situation is there is an office, and of course, the perfect situation is not practical. This is hypothetical. But there is an office, a beautiful, fun office that I can go to if I want to go to. Uh, if I feel like I work better in that space today. Uh, but the default. So yeah, where we differ is in the default. Basically, and uh, the, while you are correct in most of your complaints about most of your critiques of remote, it's a better way to put it. Most of your critiques of remote, other industries, even before COVID, have shown us that you can create great culture remotely. It's just hard. It takes both technology and management leadership to do it. And I do think that our industry hasn't quite figured it out.
It
Uh,
might be
how to
definitional,
do it
Tony.
well.
You might have to sit down and say what makes up a culture, and then go through the checklist and say, does this happen remote or not? And that's where you find that you begin to find very little that would define a culture that's remote, whereas you could find a lot in person. So every year we all march down the street for an annual meeting to talk about giving to the United Way. Every year we have the company picnic. Most people, as a tradition, go to lunch together here or there. There's a company bar that's not really our bar. There's a cafeteria group table that everybody goes to talk about. There's what is a culture, and if you make the checklist of what's a culture and say, does this really apply to remote, a bunch of things drop off. And so, yes, you have a culture, but it's limited to a few key things as opposed to in the workplace where it can be a lot of things that are a tradition within your organization or a standard within for instance, we have a rule here that you shouldn't use an acronym that nobody understands. And they say, well, everybody in insurance understands. I said, yep, that's not everybody. It needs to be more. 100 million people in the U.S. need to understand this acronym for you. You can use NY because they all know it means New York, but you can't use CR because nobody else outside of insurance knows its combined ratio. So that's an internal speaking culture that people can call each other on when they try to communicate. It sounds mean, by the way, when you do that in an email and say, "Don't say CR." It's a lot funnier when you say, "Ah, got your acronym." Put a penny in the jar. There's cultural things that happen with each other in a room that fall off the list of what is a culture online. So yes, there is a culture online. No, it's not as thick, I guess is the right way to put it, as in person.
I tend to look at labor, well, at insurance talent things, questions from the perspective of generations. So I wrote the book on how to engage millennials in the insurance industry. Currently writing the book on how to engage Gen Z. So I spent a lot of time thinking, and I'm not a primary researcher, but mostly I bring the ideas from primary researchers into our space. And when it comes to remote, there seems to be a significant generational uh, disconnect. So interestingly, Gen Zers, so that the kids coming out of college right now, interestingly, they want some level of in person because they live in cramped apartments and they do realize that training learning the job is a lot better in person, especially if you work for an industry like insurance, which is complex and we haven't really figured out how to train remotely really well. Uh, my fear is that as they get trained, uh, and they become more valuable in the industry, how do we keep them? So that like, and millennials who are now trained, uh, how do we retain our great talents if they have the opportunity for more remote flexibility at other companies after we have trained them?
Well, I think you're more committed to a human than a company. It's your boss, your coworkers, it's the
Thousand
culture.
percent.
So, there was a guy, there is a guy, actually, he's not dead, Professor Nick Bloom out of Stanford, who was studying working at home long before the pandemic came. He went to I think it was a tech company in China, and split the company in half and had half of them work at home, half of them work at work, and then he did some hybrid tests and so forth. He came to a large number of conclusions in this study that before the pandemic still apply today. For instance, one of them is one that you mentioned, which is people really don't like it if they're forced to do one or the other. They want the option to do one or the other. Another one is it doesn't work unless there is at least one shared time when everybody is there at a location on a regular basis. I don't know how often he recommended it. I can't remember. Nick has now become a pretty big deal in his research. You should look him up online. And he's got a monthly newsletter that tells you the status of current work at home. And right now, working at home is at about 4 times the percentage of the population as it was pre-pandemic, and it's kind of settled there, maybe 5 times. And that's a higher number for the people who are able to work at home. But overall, work population is working somewhere around 25% fully at home, and then some portion of it hybrid. So, but the conclusions were interesting, and they apply today. And he would tell you that there was a productivity increase at the Chinese company when they got to that point of being flexible and allowing work at home and so forth. I don't know how they measured productivity. That's always where the argument comes. The employee gets really insulted when you tell them they're less productive at home. So I just cede the argument and say, all right, maybe you're more productive at home, but I bet you we as a company are better with you at work. I don't know if you're really more productive at home or not. It makes me wonder why you're not productive at work. But but it but you know it, but let's say you're right. I still end up with a better product for my end customer when you're working with each other, and that more than trumps the whatever measure of productivity you're hanging your hat on. But Nick's work is pretty interesting that way, in the sense that he's. I've asked him once when they announced 4 different companies announced a return to office initiative for very large companies within a month, and why his numbers didn't move. And he said that, well, it's more complicated. It has to do with the fact that a lot of these people already were working at home before the pandemic hit, and a lot of them were already field people, and many of them moved and remained working at home for a different company. So there was some fungibility in the workforce. So it was an interesting conversation, and he's been studying it for a long time. It's a good place to look at where it's going. I think it's settled into maybe a longer term equilibrium. Um, but I don't think that I am losing any young people who are committed to their career. This is an interesting thing. If you're really ambitious, it's really hard to get promoted at home.
It so
Your boss never see the guy who's making promotion decisions isn't even on the Zoom.
it is yes, it's an interesting when it comes to career advice. So when it comes to uh chatting with companies about their recruiting challenges, I strongly advocate for as much remote flexibility as possible. When it comes to career advice for young insurance professionals, I strongly advocate for them to go into the office. Because yes, as the industry is structured today, it is hard to get promoted if you're remote. That's true. Uh, my vision of the industry in the future is significantly more remote friendly, and then it won't matter as much. But on the generational piece, another piece that I don't hear about talked about ever is the decisions on RTO are made by the current leadership, and the current leadership is by definition mostly baby boomers, some Gen Xers, uh, just because they've been around for a long time, right? They have the experience, they've had time to rise to those levels. Um, so what I don't know if the people making those decisions understand is that when they were 30, uh, the percentage of them that had stay-at-home spouses was significantly higher, and also cost of living, especially housing costs, were significantly lower. So the challenges today, like I can't tell you how often I talk to millennials or Gen Zers, and basically their perspective is, it's not that I dislike the office, it is that we're a two-income household. Childcare is so crazy expensive, and it's so crazy expensive to live anywhere near the office that it becomes painful to go into the office compared to not going to the office. And I don't know if the leadership at most companies in our industry recognizes how different the environment is today versus when they were our age. And says the 42-year-old,
I
I'm a
wouldn't,
little
I
older.
wouldn't, I wouldn't attribute it to ignorance. I think that they have the most to go home for, right? They have nicer homes with bigger families at that age, and they have more things that they can afford to do outside work. So I would say that potentially these people you're saying who might be, you know, um, unsympathetic to people who want to work at home is actually, it's not ill-informed, it's well-informed. They're probably giving up more than the person who they're asking to come to work. But even if that's not true, you're trying to generalize segments of the population to be everybody's issue, and that is true. It is an individual issue, person by person, that it might be more convenient to work at home, that they might have not be able to afford childcare and housing and less live in a cheaper place. By the way, I haven't seen a study on whether the people who work at home are more likely to be in less expensive housing. I haven't seen that connection yet. It'll be interesting to see if somebody does that one. But set that aside, I'm almost certain that they're going to more pleasant places to live, which tend to be more expensive. But you set that aside and you say, all right, well, is that person individually more suited to work at home than this other person, whether it be Gen X or Gen C or whatever, and you'll find that will be more of an explanation than the overall generalization of an entire generation. And the reason I say that is because today's generations coming out of school really lose a massive opportunity socially for quality of life by not coming to work. And so a lot of them have come to the conclusion, I'd rather be at work with a bunch of people who are going through similar things at my age, and I can get a better sense in that perspective of whether I'm really advancing more quickly and learning more quickly, and whether this is the right career for me, because I see how other people who have advanced are doing, and whether they seem happy or not and are wealthy or not. So that opportunity is not lost now on recent graduates. I think they're beginning to be biased toward a social environment that is outside of just the home. And that's a generalization too. So I'm guilty of what I just told you not to be guilty of. But it is very individual. There's no doubt for me, for instance, that women would want to be at home after the childbirth and would prefer not always to be working on the baby. They'd like to work on something else. And some jobs might fit for that. We also have to make sure the jobs are available to them when they do want to come back, and that they don't lose any ground when they do. So there's other responsibilities I have as somebody who asks you to come to work that I might not otherwise have. And we're pretty aware of those. We're quite generous with our benefits at Plymouth Rock.
Fantastic. Um, when I worked at Farm Bureau of Iowa, they're the only employer I ever worked for that. And Iowa is a pretty cheap cost of living state. Land is pretty cheap. and labor is cheaper than in a lot of the rest of the country. Uh, they offered daycare. So they had like a daycare. Now, not to everybody, but they had a daycare that generally had a wait list, but that was kind of subsidized by the company and on premises. I wonder if, and I don't have any kids, so I don't have a horse in that race. But I wonder if that could be part of the solution to encourage people
Part
to
of
come in.
it's part of what expands your job applicant pool, no doubt about it. So, and every time you do something that accommodates a segment that needs it, then you're going to attract more people from that segment. So that it's fair to say that my applicant pool would be expanded if I had work at home options that I don't have today.
One thing that you talked about earlier is so with Plymouth Rock Home Assurance being kind of a medium-sized company, a number of employees. Uh, you know that you're recruiting from a smaller pool, but I'm curious if you think that like long term, a State Farm or one of the gigantic carriers, do you think that fully in the office would work for them in the long term, or because they have to hire so many people, it's going to be a lot more challenging?
I don't know. I don't know the answer to that. I can tell you that um, there's an interesting mix of large companies that have gone back to the office, at least 4 days a week, and that's now over the average of those who have hybrid arrangements. And I think I can't tell you. I think everybody's had a problem hiring, whether you work at home or not. I don't think that was unique to us or anybody else. Um, but it's coming back, right? It's the employees are now beginning to recognize that the trade-offs they're more informed about the trade-offs. So is there a value to working for a company like State Farm that you can't get from a smaller company? Yeah, sure. There's a lot of great things about working for a large organization. But I also think if they decide to be the one that doesn't work at home, they'll just get a different segment of the population. I don't know. It's a good question. Would it be tougher for State Farm to go fully in office? I'm not sure they aren't already there, but yes, that might be tougher for a larger company. And so whenever that happens, I always recommend that you chop your company up and make it smaller. If you're having a big company
Perks of
problem, make
that.
it smaller. A bunch of smaller companies. It's because, one of the old books that's out there called The Mythical Man Month has been out there for 40 years. And it said in its first chapter, it says, hey, of course it's more expensive to do systems projects and takes longer and has more errors for big companies because they're more complex. They're trying to carry a bigger load than everything else. And you just kind of laugh at the logic of it, and still people are amazed today that big companies don't have a tech advantage. Of course they don't.
In our industry, WR Berkeley is a fantastic example
Yeah.
of the beauty of keeping the company small. And they will quite literally, once they hit 300 or 400 people at a company, they'll quite literally split it in two. And they're very good at what they do.
So Plymouth Rock as a brand has four different companies with 2,000 some employees, just about right at 2,000, and 2.5 billion in premium. But we've broken ourselves up into a smaller services company does our IT work, into three different organizations, two that are channel-based auto companies, and my company, which is the home company. And that enables us to not only create a more nimble environment, but to try things in one place that if they don't work, they stop. And if they do, everybody else adopts. So it's don't underestimate the value of being small.
I would agree with that completely. Um, Kind of starting to close here as we run out of time in the next 10 minutes or so. Uh, you definitely brought some great points, and thank you for the reference on Nick Bloom. I'll definitely sign up for his newsletter. I think I've read the original study, but I have not kept up with him, and that is definitely right up my alley. Um, I'm curious. beyond the return to office conversation, what else are you seeing for the future of our industry next 5 to 10 years, especially when it comes to all of we have 10 years worth of what I call the insurtech revolution. And I think it's starting to like become a part of how we do things. So what do you expect for the next 5 or 10 years of the insurance industry here in the States?
So, um, it's kind of weird to be looking at it from my standpoint because I try to be young and I've aged beyond what I try to be. So, and I'm become a little bit of a cynic about the insurtechs because I'm jealous. I'm jealous of guys who can create companies that lose a ton of money, go public, and cash out. And you're like, well, what did they just build? Anybody can grow a company that loses money. It's actually pretty advantageous to grow your company by losing money in the insurance business because everybody compares your rates. So you can grow pretty quickly by losing money. So, it's what did we really build in the insurtech revolution? There are pieces of it, as you've noted, that are coming out and now becoming kind of more understood and more universal. But the people who are benefiting the most from it are the large companies who've employed it. So branding became a big deal in the 2001 tech revolution before it crashed. And everybody in the big companies now do a better job of branding than anybody in the smaller companies. They don't change their logo every 3 months or put their CEO on TV as if those are the right things to do. And then try to make them look revolutionary. The idea of highly sophisticated rate segmentation and use of data. It didn't start with the small companies; those started with larger ones. But the challenge by the smaller companies made accelerated the development in the larger companies, and so product management, which is where it was housed, has now become data science in multiple locations of a company. So some of the things that were maybe baked a little bit in the insurtech oven have really helped the large companies dominate and consolidate market share, especially since they have a more longer vision toward, one small areas catastrophes or bad severity trends. They can last through it and almost smooth it over for their customers to the point where they're getting the retention that nobody else is getting and thus growing massively. Today, Progressive, I was calculating the other day, Progressive quotes something like 3 times the number of customers any other company does and ends up capturing a bigger share of people who
Wow.
switch than any other company does. And that's why they keep growing even at the size they're at. And they're doing it by doing things that tech companies may have either pioneered or might be marketing today as revolutionary, but they can do it because they're large and much with scale. So I really like what has happened in my lifetime in the industry in terms of attracting more aggressive, more creative, and more brilliant talent than the industry was known for. We're no longer just that guy who steps into the puddle in on Groundhog Day, right? Ned Zenderman or whatever his name is.
Yeah, yeah,
Is
yeah. Oh my God.
that
Yes.
was us. That was us when that movie came out, and now it really isn't. Now we're actually looking a little bit smarter than the guys in Silicon Valley these days. This is good. This is good because a lot of my friends are still in Silicon Valley. So, so I think we're really proud of that, and what we're going to see as a benefit is just going to bloom. I hear a lot of people talking about, oh, the industry is going to age out, and we're not going to have young people coming to it. And I'm like, where are they at? I'm actually enjoying the amount of young people are coming, and you want that talent to come aboard from other industries with a consumer products mindset because they'll solve the problems that the consumers want solved. Whereas the rest of us, we know all the reasons why we haven't solved them for them. I mean, we all think it's, a Gordian knot that can't be untied. The guy will just come in and say, "Why don't we just try it?"
Uh,
You say, "Yeah, yeah, because this," and then you realize, why don't we just try it? More of that kind of bright risk-taking talent is going to really make some cool things happen. The best thing that could happen to this industry is for people to start inventing features, coverages, and products that people want to buy, not have to buy, want to buy. And when we get there, then you'll decommoditize the market, just like phone calls were decommoditized by the cell phone. Once we get there, then you're going to see a transformation that like nothing we've ever seen, where people are battling to give more, not less. And that's what I see in the future as the result of us bringing so much talent in the past. And I hope I'm alive to benefit from it.
That is a beautiful vision, and I agree with pretty much everything you said. The first few insurtechs that were risk-carrying entities and that thought that like they had no understanding of insurance, and the worst part is some of them IPO'd as tech companies and then tanked, made the
Well,
rest
you know, got a lot of people
of
talking about how Lemonade's been the best insurance stock of the year. They forget that they're still not even half of what they
yeah,
were in value when
agreed.
they IPO. It's like, hey, I lost $5 and now I'm up to 250 and celebrating.
Yeah,
So I don't get it.
agreed. I think that it, we've had 700 insurtechs on my podcast, and the ones that I get excited about are generally, and people ask me all the time, who are going to be the winners? I have no idea.
I know one, and that's the ones that make money.
Yeah,
So
yes.
I know one of those, right? You know, the big difference between Neptune and all the other insurtechs is it makes money.
Uh,
It's the unicorn of unicorns.
I am glad that things are maturing and we're seeing less and less less and less lemonades, and more insurtechs founded by us, by former insurance professionals with who found a real problem that annoyed them their whole career, and then they partner with technology to solve that problem. Uh, so I do think at the end of the game, whatever that might be, we're going to end up with much better technology and much better, and also, like you said, better talent because
Mhm.
it's put us on the map for talent that would have never considered working in insurance before. Ned Ryerson is, I just remembered.
Ed
Yes.
Ryerson, there you
Uh,
go. That's what it
yes.
was.
Moving away from the Ned Ryerson era is a win, regardless. And I do think you're young enough that you're going to benefit from seeing a lot of this happen. Uh, and I hope that your vision, which I agree with, I hope that it is correct when it comes to creation. The insurtechs that I get most excited about, the ones I don't know if they'll be successful, but the ones that are creating real products that we need. Uh,
Yeah, they're creating value, right? I mean, they're coming up with things that, like I say, people want to buy. It's the things that we have traditionally said we won't do. Um, we should revisit and say, is there a way to pull this off now? Now that I have the entire universe of knowledge able to be
exactly.
delivered to me through Chat GPT or AI, is there something I couldn't do before without that?
Exactly. Is there something we can do now because we have much better data, because we have AI, because we have so many, more compute power, etc. Are there things that we have the data to ensure now that we didn't before? And really, what's going to happen with the Neptunes of the world? They're going to get acquired by one of the big players, and get integrated, hopefully successfully, into the future of our industry. Bill, a real pleasure, honestly. I generally hate panels because people tend to be too polite and agree with each other. Having you on the panel was a pleasure, because it was a bit of a contrarian view to that particular panel, and then I really appreciate you coming on the podcast, knowing that we disagree on the basic topic of today, and you make a really good case. Definitely left me with a lot to think about. Yeah, thank you so much for your time today. If you have any closing thoughts, or if you want to make a pitch for hey listeners, you should come work for Plymouth Rock Home Assurance because of X.
All I can say is, I talk about the future. I would tell you it actually exists in environments that do have the right culture, and this is one of them. So I like to brag on Plymouth Rock with that all the time.
Absolutely.
You can qualify as a legacy carrier or a startup, and you'd be right both times. And it's just as fun. It's kind of the most fun parts of both.
Well, I should have probably given a little bit of a better introduction in that you're not a 100-year-old carrier, right?
No,
It's
40 years old.
fairly young for a carrier.
Yeah, yeah. Thank you.
No,
Oh, really, it was,
in personal lines, the top 10 carriers, the youngest one is Allstate, which is 85 or 87. Uh,
yeah, I mean, there's some younger ones that are specialists, like the Florida specialists or whatever. But you know, if you don't point at the house of cards, you're probably talking at some stalwarts. The funny thing is that a lot of their successes come through difficult times, whether it be the liability crisis of the '80s or the Depression. That's their ability to be resilient was as important as their ability to be creative,
oh, a
and every
million.
one of them was
Yes.
creative when they started.
I spend a lot of time explaining to the young talent and explaining to the insured techs because they're always going like, Tony, like this is the number one question, either during recording a podcast episode with me or at the end, like once we're no longer recording. Tony, why are insurance companies so slow and so conservative? And I'm like, I didn't see it, but I'm a history nerd. And the ones that were not conservative in the way they underwrote went out of business. Uh,
I don't think that's the reason they went out of business, but you know, you got to be able to take risk. It's your ability. The resiliency actually comes from recognizing when it's not working and fixing it, and not from being slow. And I mean, you would be shocked at how creative the people in State Farm's executive suite are. They people say, you know, they're running at a 115 combined ratio. They don't know what they're doing. And I says, no, you don't understand. They're growing their surplus at a 115. They got something that we don't. And if they grow their surplus faster than their exposure, then they're actually doing everything that a mutual should want to do. So I think it's really fascinating to me that how critical we can be of some very creative people.
you've not only been around the industry for 40 years, but also you're clearly a student of the industry. So I'm really curious. We used to finish every episode asking the guest, what insurance books do you recommend for people to read? So I am curious. Any reading recommendations that would be really helpful for a young insurance professional?
It's really hard because, you know, some of the best books that have influenced me are the ones that are about breaking paradigms, and they haven't always been about insurance. But then I like history, and so I really enjoyed reading about The Farmer from Myrna, which is State Farm's
Founding,
book.
yeah.
And I really enjoyed reading about McDonald's. The book McDonald's by Smith is really spectacular because you realize that McDonald's is you know, obviously a pretty good fast food success, but it's actually a real estate success. It's fascinating how they finance that whole growth. And then, of course, I read a lot of the stuff that kind of tries to break analytical paradigms, like The Flaw of Averages by Savage, or
The
Dan
Flow of
Ariely's
Averages. That
Behavioral and
sounds super
Economics
interesting.
book, and those guys. You know, so they're even if they get, you know, the old Search of Excellence books have all been not defrocked, but all the companies are gone. But the points really live on in terms of let's change the world in order to succeed. And if we change it in a way that benefits the customer, we're going to succeed that much faster. So,
Fantastic. Thank you so much for your time. I don't want to make you late to your next meeting, and we are literally out of time.
okay.
But a real pleasure. Again, thank you so much for your time today.
Good to talk to you, Tony.